So Jerome Powell is the current chair of the Federal Reserve. He was questioned by Senator Elizabeth Warren pertaining to inflation, and Senator Warren actually got Jerome Powell to essentially admit that corporate greed can be a major contributor to inflation. This is something we've covered at length. I read an article from Real Progressives a few weeks ago, written by Artemis. It's a fantastic piece. Go read it if you missed that segment. And it was about how corporate greed causes inflation, not public spending. And again, just to give the caveat, you guys, MMT acknowledges that inflation is a constraint on spending. But we also acknowledge the nuance that we are nowhere near inflation that is caused by public spending, by the demand side. So go read that piece if you haven't yet. We've covered a couple of times how Kroger was boasting about how they're passing these costs on to their customer and then some, which essentially means they're taking advantage of increased prices to further price gouge because the customer is already expecting it. So record corporate profits would seem to undermine the idea that this is true inflation, right? So I want to show you guys this clip. This is just a couple minutes. This is Jerome Powell being questioned by Elizabeth Warren, making quite an admission and acknowledging that corporate greed is very much a contributing factor to inflation. I'm sorry, guys. I think I screwed that up. Just a second.
Ask it the other way then.
There we go.
Because we're still kind of doing econ. If you're a corporation that has eaten up most of the competition and cornered the market, is it easier for you to raise prices on your customers and maximize your profits because you don't have to worry about losing your business? In other words, you've lost the discipline that the market imposes.
In principle, if you don't have competition and you're a monopolist, yes, you can raise your prices.
Okay, and over the past year, we know that prices have risen because of supply chain problems, unexpected shifts in the demand for goods, and even higher labor costs. But if corporations were simply passing along these costs in highly competitive markets, would the company's profit margins have changed much?
You know, so many things affect those that calculation. In principle, you could be right, but
well, it's very much not what we're seeing right now. Today, nearly 2 out of 3 of the biggest publicly traded corporations in the country are reporting fatter profit margins than they reported before the pandemic, which doesn't sound like they're just passing along costs. So let me ask you, does that increase in profit margins combined with greater market concentration in industry after industry suggest to you that some corporations may be passing along increased costs and at the same time charging more on top of that to fatten their profit margins?
That could be right. It could also just be, though, that demand is incredibly strong and that you know, they're raising prices because they can.
Well, that's the point. They're raising prices because they can, and they're not being competed down. You know, market concentration has allowed giant corporations to hide behind claims of increased costs to fatten their profit margins. So the consumer pays more, both because the corporation faces higher costs and because, as you put it, because the corporation can increase prices. The reason I raise this is that higher prices have many causes, and we can't overlook the role that concentrated corporate power has played in creating the conditions for price gouging. Now, before my time expires, I want to ask you about one.
So, you know, I got all the issues in the world with Senator Warren, particularly how she did Bernie and all that kind of stuff. But she's right about this. And she got Jerome Powell to largely admit it. He tried to go down the path of saying, perhaps demand's just so high, but then he admitted, so they can raise prices. They're raising prices because they can. So that would seem to sort of undercut the idea that this is some sort of natural pressure that is forcing corporations to raise prices. No, it's that they're going to raise prices anytime they can, right? We've seen the results too. Kroger closing stores, cutting employees while they're making record profits. So this idea that there's a connection between corporate profits and the well-being of the employees or the livelihood of the employees, if there is a connection, it's almost reverse. As the corporation rakes in more and more, they treat the worker worse and worse. It's almost how it seems, right? They lay off workers, they close stores while they're making record profits, and then they turn around and say, but you just need to increase our profits if you want more stores, right? So they always want it both ways on all of these arguments. And when the labor market is such that there is the slightest bit of leverage for the workers that they want to exploit, they throw a hissy fit, and their corporate media mouthpieces start blabbing on about how too much government spending has caused inflation. And that's just not the true story. It's not the correct way to analyze this stuff. So I just want to tout that article on realprogressives.org from Artemis, as well as we recently did an RP Live event. It was a Zoom call with Dr. Fadl Kaboub. That was a talk focused on inflation. He talked for, I don't know, maybe 20 or 30 minutes about inflation, and then took questions from the audience. So I encourage you all to look into that if you're interested in the MMT analysis of inflation. And he was able to answer how it's not it's not too much public spending that is causing this, and Fadl actually argues that properly implemented public spending could help get us out of it. So again, I want to tout that interview, or that talk rather, if you want to go find that. That's on the Real Progress in Action YouTube channel with Dr. Fadl Kaboub. But here's Jerome Powell effectively admitting it. Elizabeth Warren got him to admit that the raising prices are because they can. And that's exactly what the story from weeks ago about Kroger acknowledged.